Happy New Year. My name is Rick Leinbach with Startup Portal. Are you planning this year to raise capital, build your business, or find a financing? Startup Portal is going to be here through the year to help you. We're going to go, sometimes live, sometimes recorded. Today's recorded for helping you think about your finances, your financial lap lane, and getting your business or your soon-to-be business up and running. It takes a little time. So, this is where you begin, and hopefully we educate you. We're going to educate you through seminars, maybe some one-on-one, but weekly we'll have ideas, we'll have samples just to show you. And we really want to talk about the reality of the numbers. So basically your revenue, your gross margin, your sales, and we want to look at historical financials. If you've been in business for some time, you really want to take the time to say, okay, what have I done, and compare yourself to others in the industry. And then also what we do is we look at financial models. And when you have financial models, it allows you to look in the past as well as in the forward 3 to 5 years. So that's really what Startup Portal is going to do with a weekly podcast, live cast, you name it. We're gonna figure it out as we go. Second part we really want to talk about is financing. The different types of financing that are out there, why you need a financing. Who do you want your partner to be in financing? Is it a bank? Do you want partners for raising capital? Do you want, do you need debt? There are other facets that we can get into of revenue share and convertible debt, but early on that's probably a little too early. And then what happens is we want to embed that into your business plan. So you really look at, okay, I've done my model, done my 5-year projection. At what points am I going to need capital if I execute according to plan? Now, let's be real. Plans go left, they go right, and really your personality adjusts, how you deal with that and how you adjust to it. The plans are imperfect, but they're there for a reason to really help guide you. So, with that said, we're going to look at the different types of financings and help you get there with regards to potentially your need. Now, one of the facets we're going to talk about are bank loans. Are you bankable? If you're operating a business today and you have a simple line of credit, you're bankable. And the line of credit, it serves purposes and needs, right? If you're billing customers on a 30-day and you have payroll to pay through the month, the line of credit can help you manage the ups and downs of payroll. Financing equipment, financing long-term growth needs can also be done through the bank, and basically can it be done on a 3 to 5 year basis. And when we talk banks, we usually think about the traditional local bank or big bank, and they have that risk-reward aspect to them, where larger banks have a lower interest rate and they also want the lower risk with it. Therefore, you're talking about collateral. You're talking about personal guarantees. Some people have to put their homes up, which none of us want that to happen in today's world. So we may have some alternatives for that. So really, I'm looking at the banking world and what needs are out there. And I would caution, one aspect is there's a lot of what they call fintech banking aspects out there where you can go online and get cash in a day. Well, a lot of those cash in a day scenarios have very high interest rates. The other aspect is they take cash flow typically on a weekly basis. So if you're going down that path, and you may need to for a short run, but you have to have a solid cash plan to help you bake in the cash flow coming out on a weekly basis. And it will come out on a weekly basis, no doubt about it. So that's the banking scenario we're going to talk about. So then we can talk about equity. Equity is no different than investing in a large stock. Under Armour here in Maryland is a big one. So equity is one where you can be a shareholder, and you can have shareholders invest in your company. You're the biggest shareholder typically, but you have shareholders invest in your company for the long term. Now, really that will get into, do you want to have partners? right? Because it's a relationship now, and that you have folks that have invested in you and they're expecting a return down the road. The second element to it, very important, is governance. And what governance means is that you're going to actually have a board of directors. You're going to have to follow some kind of, I guess, A, the law, but two, basically the rules of the road for your company. And typically it's very well defined, but you do have to have a secretary and minutes and all that formal stuff. And then the other aspect is communicating to your shareholders. Obviously they're partners and they're basically inactive partners, but their emails work, so they'll be very active to say, hey, how are we doing? Or why aren't we doing this? Or why aren't we doing that? So it really goes down, we'll break down to, does it fit your personality? So the last piece that we're going to talk to is something that we have a lot of data here at Startup Portal. It's called equity crowdfunding. And we're going to use equity crowdfunding data to educate all of us on all attributes I talked about with debt, equity, etc. With equity crowdfunding, we're looking at how you can help have the crowd go from not just a t-shirt for investing in you or investing in your first product, but actually participating in equity, participating in your business and financing through potentially debt, through equity as a common shareholder that we talked about. Actually, there's some attributes that are very cool, like revenue share. So they're going to invest in you, you're going to pay them a return, and then they're going to get a nice return, and you're basically going to pay your debt. So it's a form of debt. And then traditional debt as well. And it doesn't matter the size. We really haven't defined, okay, what's this mean? But we'll get into, it could be a $25,000 raise, it could be a $5 million raise. And everywhere in between, and people have done it all around the country. We'll give you a little tidbit on the screen here, the different types of equity crowdfunding, but we got to break it down for you, because if you see it all at once and you see our nice picture, you're going to say, what is going on here? So with that, in equity crowdfunding, we're going to break down the different portals. So it's regulated similar to a stockbroker, and we're going to have to go through the 60 plus portals and break down what they mean, what's their purpose, what's their business plan, and does it fit your business plan? And we'll give you some good examples, and even offline we're going to have some seminars, and glad to share this information with you personally to fit your business model, so maybe we can follow up later and talk about it. So I have gone through a lot of information and talked about, equity crowdfunding, financing, equity, you name it. It's a bit complicated, but it's not, because other people have done it. So we're able to look at what others have done, how much they've raised, and really share information to show you, okay, what am I going to do? What decisions am I going to make that are best interest of my company and a fair and best interest of the shareholders or stakeholders, let's say. So that's what we're going to do this year, and we're really going to show you some of the risks of it, some of the industries, basically making sure there's profitability involved, and really to have a strong business, and we'll be hopefully your financial guidance to go. Although, obviously from a guidance perspective, it's always on you to make your best decisions. Talk to your accountant, talk to your attorney, talk to your spouse, don't forget that. So those things we're going to do, and we look forward for you to follow us on social media, YouTube, Twitter, Facebook, Instagram, you name it, and it should be a good 2023. Take care.